So, hello everyone. Thank you for joining, taking time out for this small session, the applicability of GST on directors' remuneration. So I'll break down the structure of how we are going to approach this. So first of all, we'll give a small background of how the GST regime in India is currently functioning. What is the structure? What is the constitutional mandate behind it? Then we'll try to summarize what are the transactions which fall within the net of GST in ordinary course. And then we'll subsequently address the core issue and the core agenda behind this entire session. That is why is there any requirement to levy GST on the remuneration which is being given to the directors, or is it not valid in the first place? Then we'll also discuss the commercial side and the commercial impact of it on the larger, all the corporations which are functioning in India currently. So at the end of that, we'll have a quick Q&A session. So if there are any questions, please feel free to raise your hands or put it in the Q&A box. We'll take them up at the end of the session. So is there anything else that you would like to add, Gulani? Or should I? Yeah?
Yes, you may proceed.
All right. So we all know that in 2017, July, that was when the GST came into being. Before that, we had a different regime which was spread across quite a number of legislations. So for manufacturing, we had excise duty. On import of goods, we had customs duty. Similarly, on the sale of goods, whether within the state or outside the state, we had CST or VAT. Similarly, we had other taxes also, which were like, for example, service tax, which was on the provision of services. So with a view to consolidate all of these legislations and bring one tax for one nation, GST was implemented. So the idea behind was that there should be a uniformity of taxation across the country, irrespective of the transaction and irrespective of where you're located. So with this objective in July 2017, certain amendments were made and a road was paved for the introduction of GST. So the first change and the foremost change that it's important to discuss is the insertion of Article 246 capital A. So I'll quickly share the screen so that we all can read the article together. So I've highlighted the portion of Article 246A. 246A talks about special provisions with respect to goods and services tax. We all know that under the Constitution, the powers of the Parliament and the state legislatures to legislate upon any issue is mainly guided by Article 246, which, when read with Schedule 7 and the lists which are appended to the Schedule 7, we get an idea of what are the areas or what are the domains which are exclusive to the Parliament legislature, state legislature, or are concurrent to them. But 246 capital A essentially stands as an exception to this general reference point, because it's a non-obstantive clause. If you'll read, notwithstanding anything contained in Article 246 and 254, Parliament and subject to Clause 2, the legislature of every state have power to make laws with respect to goods and services tax imposed by the union or by such state. So by this, it gives an exclusive power to the Parliament as well as to the state legislatures to legislate upon goods and services tax, which is subject to Clause 2. So what does Clause 2 say is that when it comes to interstate trade or commerce, that is the commerce or trade that is going to take place between two states, the exclusive jurisdiction will be that of Parliament, meaning thereby that if there is a sale of an item which is being made from Delhi to Tamil Nadu, the tax on that will be exclusively levied by the Parliament. Anything beyond that, anything which happens within a state or a union territory, the Parliament does not have an exclusive jurisdiction. So this essentially forms the basis or the genesis of entire GST legislation in the country. Now, the GST legislation across in the entire country can be divided into three broad enactments. We can say four, but essentially there are three. So two of them are central legislations, and the third is a state legislation. The first is, and the foremost is IGST Act, Integrated Goods and Services Tax Act 2017, which levies goods and services tax on the interstate trade, interstate suppliers. And then first there is another enactment called Central Goods and Services Tax Act of 2017, which is again a central legislation. And then each and every state or union territory has its own state or union territory GST Act, which only applies to the transactions which are happening within the state. So this is the broad overview of the GST laws as they exist in India. So while we always study taxation, the first thing that, first and foremost, question that we need to answer is, what is it that the legislation is trying to tax? What is the subject matter of tax? What is the activity which the tax is going to be levied on, in other words? So for that, we'll make a quick reference to the CGST Act, because we can also refer to IGST Act and SGST Acts. However, for the ease of reference, I must tell you that SGST and UT GST Act, Unit Territory GST Acts, are very similar to CGST Act, which are pretty much borrowed. Similarly, the IGST Act as well borrows majority of its provisions, barring a few here and there, from the CGST Act itself. So for the ease of reference, we'll only be referring to the CGST Act. So I'll quickly take you through the relevant provision of CGST Act, which will make it clear that the domain of GST Act, or what is the subject matter of GST Act. So we'll read section 9. I hope everyone is able to see that. Lalitendra, is there any issue?
No.
Great. Section 9, levy and collection. Mind it, we are referring to CGST Act. It says, subsection 1, subject to the provision of subsection 2, there shall be levied a tax called Central Goods and Services Tax on all intra-state supplies of goods or services, or both. So we'll come to the exception in a moment, but the subject matter, as it becomes clear from the reading, is all intra-state supplies of goods or services, or both. If you refer to IGST Act, the only difference will be the word intra. It will be read as interstate supplies of goods or services, or both. So essentially what GST is targeting is the supply of goods or services, whether they are within the state or outside the state or union territory. Now, question comes to mind, what is a supply? And this is one of the most important aspects of GST, because as I mentioned a few minutes before, the earlier laws, for different aspects of a business transaction, there were different enactments, there were different taxes. So suppose I'm a business which manufactured biscuits. Then on the manufacturing activity, there was excise duty. So the moment I manufactured, I became liable to pay excise duty. Similarly, when I sold them in the market, then I had to pay VAT or central sales tax, depending upon the kind of sale, whether it was intrastate or interstate. Similarly, if I was providing services, then I would have to pay service tax and not excise or VAT, because they were services, not goods. So to address this and to bring uniformity, GST was brought into force and the concept of supply was introduced. Now, what is supply is actually everything and anything that you can think about in terms of exchanging hands. So whenever something or any goods or services changes hands, as per the definition of supply, it becomes a supply. So supply is defined under section 7. So we'll read section 7, subsection 1. It's visible on the screens as well. For the purpose of this act, the expression supply includes, please take note that this includes, so this is not exhaustive list. This is a very open-ended list which just gives you a hunch of what all is to be included. Clause A says all forms of supply of goods or services or both. So any imaginable a service or a good is changing hands, may not be in terms of transfer of property or may not be in terms of rental, whatever it is, everything is covered. To cite certain examples, it says such as sale, transfer, barter, exchange, license, rental, lease, or disposal, or even disposal. So if I dispose of some goods, then also it may fall within the ambit of supply. Made or agreed to be made for a consideration by a person in the course of or furtherance of business. So whenever there is any sale, transfer, barter, etc. happening for a consideration, then it will qualify as supply. Then it also includes import of services for a consideration, whether or not in the course or furtherance of business, and the activities specified in Schedule 1. What is Schedule 1? We'll come to that. So the activities falling in Schedule 1 are supplies even without consideration. So as we read earlier, all forms of supply were required to be made for consideration. Import of service was required to be made for a consideration. But as an exception, wherever there is an import of, wherever activity Schedule 1, then there need not be any consideration. Then also it will qualify as supply. Thereafter, so we get an idea of what all is supply. Now, there are how do we know that certain activities are, other than the ones which are mentioned over here, are also supplies? So for this, we'll refer to subsection 2, which says, notwithstanding anything contained in subsection 1. So that's a non-obstantive clause, and it is an addition, and rather it prevails over 1. It says, activities or transactions specified in Schedule 3. So this is the tricky part, because this is where the entire issue that is before us finds its roots in. So we'll make a quick reference to Schedule 3 as well, since we are talking about this. So essentially 2 is saying that the activities or transactions which are specified in Schedule 3 will be within the scope of supply. We'll quickly make a reference to Schedule 3. Yeah. Schedule 3. Activities or transactions which shall be treated neither as a supply of goods nor a supply of service. So here's where the non-obstantive nature of 2 really shines, or really shows its relevance. Because up till now we understood that anything or imaginable which is changing hands was supply. However, when we read 2, we got to know that notwithstanding anything contained in 1, there are certain activities or transaction which shall neither be supply of goods nor a supply of services. So the first mentioned in this list is services by an employee to the employer in the course of or in relation to his employment. This is very important, and we must read it once again so as to understand what it is trying to say. It is saying that if there are certain services which have been provided by an employee to the employer in the course of or in relation to his employment, it will not qualify as a supply. So by default, there will not be any GST payable, because GST is only payable on the supply of services or goods. When something doesn't qualify as supply, the GST is not payable on that. So over here, when we see that where are the services and services are being provided by an employee to the employer in the course or in relation to this employment, then it will all be outside the ambit of GST. Fair enough. Now one may ask, we have understood that GST is payable on supply of services or goods or both, but there are certain exceptions. But the question is, who is the person who is liable to pay GST? On whose shoulder is the liability to pay GST been cast upon by the legislature? So the general rule in this regard, and as it has always been like this, I think Lalitin knows better about this than I do, that as a general rule, it has always been that the supplier, the provider, the manufacturer, etc., the seller was the person who is liable to pay the tax. This is the general rule. But there are, as always, there are certain exceptions to this. So the exception has been carved out under section 9 clause 3. I'll read it out. It says, the government may, on the recommendation of the council, by council they refer to GST council, which is a constitutional body under article 270.
279A.
79, yes, 279A. So it's a constitutional body, GST council. By notification, specifies categories of supply of goods or services or both, the tax on which shall be paid on reverse charge basis by the recipient of such goods, services or both. We'll stop here. We'll stop here for a moment and we'll break it down so that we can understand. So it says that as an exception, it doesn't say so, but as an exception to the general rule, the government may, by a notification, specify certain categories of goods or services or both, the tax on which shall be paid by the recipient. Now, what is the reverse charge basis in simple terms, without any big words? Generally, when the supplier when the supplier of services or goods pays the tax, it is known as forward charge. But since here the recipient is going to pay the tax instead of the supplier, they use the word reverse charge. So it's reverse in nature, hence the term reverse charge. So it says that wherever, or the government may by notification notify certain goods and services, the tax on which will be paid on reverse charge basis by the recipient. And the remaining of the provision says that all the provisions of this act shall apply to such recipient as if he is the person liable for paying the tax in relation of the supply of such goods and services or both. So essentially, he will step into the shoes. He will be the taxpayer for all practical purposes. That is what 9.3 says, and this is an exception to the general rule that the supplier will be required to pay. So, having understood this, now let's understand why the current issue and the thing that we're going to discuss in detail over the course of next half an hour or so. Why did reverse charge, why did the levy of GST on the remuneration paid to directors became an issue? So for this, we'll refer to the notification which has been issued under section 9.3, because it is only by this notification that the government can levy a tax on reverse charge basis. So I'll quickly open the notification. Yeah. So this notification is number 13 of 2017, Central Tax. This notification says that the government, on the recommendation of the council, this is the same wording as was used in 9.3. So in exercise of the powers conferred by subsection 3 of section 9 of the CGST Act, the central government, on recommendations of the council, hereby notifies the categories of supply of services mentioned in column 2, supplied by a person as mentioned in column 3, and the whole of central tax leviable under section 9 of the CGST Act shall be paid on reverse charge basis by the recipient. So it essentially says what has been said in 9.3. We'll come to entry number 6 in the table. So for the services supplied by a director of a company or a body corporate to the said company or the body corporate. So wherever the services which are being provided by a director of a company or a body corporate to such body corporate or company, then the supplier of the services will be the director of a company or a body corporate. But who will be liable to pay tax on this, on reverse charge, is the recipient of service, that is the company or the body corporate located in taxable territory. So this is where the issue arises, that the supplier, who is the director, instead of being liable to pay, the company or the corporate has been held liable to pay on reverse charge basis on the remuneration for the services which are being provided by the director. So to get a clarity on this, two of the very innocent assessees, they went to authorities for advanced rulings. Authorities for advanced rulings are
Kartikey,
yes, yes,
sorry, I just wanted to introduce one point before you proceed with the why these two people had, why these two innocent assessees had approached the authority for advanced ruling.
right,
It is that so basically a director is paid remuneration in various forms. Now the first form is that of sitting fees. So whenever a director, as a part of the board of directors, sits, he is entitled to fee, which is known as a sitting fee. और इसके अलावा इसके a director is also entitled to uh, some level of variable remuneration. So जितने executive directors होते हैं usually, they have their some part of remuneration linked to the profits of the company, and then there is some part of the component which is usually fixed and given monthly to certain directors. Now this component which is given monthly basis, that is salary. So the issue arose only majorly with respect to that salary component only, uh, whether it is exigible to GST or not.
correct. Because it seems slightly counterintuitive that a person who is working for a company and is drawing a salary is being asked to pay tax on that particular amount, even though on reverse charge basis, but that is pretty much the crux of it. But because as we had read under schedule 3, let me refer to it again so that we can have a look at it and refresh this. So as we had read in CGST Act schedule 3, that none of the activities mentioned there were amenable to GST. One of the things that were mentioned there was that any services which are rendered by an employee to the employer during the course of his employment or in relation to his employment will not qualify as a supply, and hence no GST will be payable on that. So what it essentially boils down to is whether a director is an employee or not. Because if he or she is a director and is also an employee, then that particular service which is being rendered by him or her to the employer will not be amenable to that GST at all. But if the director does not qualify as an employee, or certain activities that he undertakes or she undertakes are not covered by the employment, then in that case, GST will be payable on those services. So I think for a further discussion, I would pass on the baton to Lalitendra. He will be able to explain it better. So please.
I just, before I start embark on this discussion, I just wanted to highlight the impact this issue has on the entire nation. So basically, we have 17 lakh companies which are registered in India under the Companies Act, incorporated under the Companies Act. Now, all of these companies have board of directors. all of these companies are in some form or the other paying salary, and industry-wide, each company has adopted this position that on the at least the fixed portion of the fixed component of the remuneration that is being paid to the directors today, everybody has adopted the position that it is not exigible to GST, and nobody has paid GST on it. And talking about figures, there was a survey which was conducted, and which revealed that in the financial year 2015 to 16, there are approximately 1600 companies which are listed which are listed with NSE, and they paid a salary, a fixed component salary of 3,726 crores to their directors. Only these 1600 companies. Now imagine we have 17 lakh companies today in India. And this is the impact. And if this ruling basically is against the SSE, so if this ruling is brought into operation by the department, they will be handing out slapping notices to each of the companies that are there in India. Now, as we see that the whole entire issue pertains with whether a director is an employee. Secondly, whether a director, he'll be a director as a member of the board, but for the activities that he undertakes apart from being a member of the board, whether he's an employee for that purposes. So in effect, basically, what we are trying to say is that can a director have two capacities, can act in two capacities, first as a director and second as an employee. So for that, we should first of all refer to the entire concept of director as enshrined in the Companies Act. Now, if we refer to the term director under the Companies Act, we have section 149 under the Companies Act 2013, which Kartikey, I would require your help with respect to the provisions. I'm not really excited.
Sure. Just give me a moment.
Yeah, please.
Section
149, Companies Act 2013.
Directors. Yeah. I'll quickly share my screen so that it is visible to all. Yes, please.
Yes. So if we read section 149 for a moment, section 149 says company to have, this is the heading of the provision, company to have board of directors. And it reads, subsection 1 reads, every company shall means mandatory, every company, all sorts of companies shall mandatorily have a board of directors consisting of individuals as directors. Why I refer to the term individuals is because for members, a company can have another company as a member, a shareholder. So for example, A Limited, if we have A Limited, its shares can be held by B Limited. But when we refer to the term individuals, the term individual implies it has to be a physical person and not a body corporate and not a company and not a statutory fiction. It has to be individual and they will be directors. And basically the provision goes on to say that a public limited company will have 3 directors, a private limited company will have 2 directors, OPC will be fine with 1. They can have at max 15. If more than that, they'll require special resolution. Now coming to the definition of directors. The definition of term directors is in subsection 34.
Yeah. I'll just quickly refer to it.
Now, it's couched in the expression means, which means that it's an exhaustive definition. It means a director appointed to the board of the company. So, a director, any person who is appointed to the board of the company, is a director. Now, the question that we need to basically understand is what are the types of a director? Under the company law, we can have a managing director, we can have a whole-time or non-whole-time director, we can have a executive or non-executive director, we can have nominee or independent director. Now we need to also refer to the definitions of each type of director. So for example, independent director is defined. Independent director is defined in section 2 clause 2 clause 47. If you come to 2 clause 47, independent director is defined. That definition, 47, means an independent director referred to in subsection 5 of section 149. Section 149 is again 149 clause 5 basically provides for the qualifications of an independent director. Independent director has to be a person who is of repute, who has expertise in some area and who is not related to the shareholders and all. Now we need to refer to the definition of managing director, which is at section 2 clause 54. 2 clause 54 defines the term
Managing director.
Managing director, yes. It means, again, means clause, which means exhaustive definition, who, by virtue of articles of the association of the company or agreement with the company or a resolution, by resolution passed in general meeting or by its board of directors, is entrusted with substantial powers of management of the affairs of the company, and includes a director occupying the position of managing director by whatever name. Now, there are two parts to this definition, which is the first part is prior to the and the second part is post that. The second part we can definitely ignore, which only covers, includes director occupying the position of managing director. We can ignore that. Basically, the term managing director means a director who is entrusted with substantial powers of management of the affairs of the company. Now, coming to the definition of full-time directors, which is at section 2 clause 94. Now it is very important to basically understand the scheme of this enactment, this company law, to understand the entire issue, the issue in entirety. The advanced ruling authorities basically understood only a part of it and subsequently passed a ruling which doesn't make much sense in law, which is quite incorrect in law, contrary to Supreme Court judgments. Supreme Court judgments, that too of those judgments which were passed by three-judge bench, full judge bench of the Supreme Court. So, coming to the definition of full-time director, 2 clause 94 includes a director in the full-time employment of the company. Now there is another definition that we can refer to, that is of executive director. Kartikey, we can leave. We don't need to basically open that definition. That definition is provided in rules, Rule 21K of the company's definition of
companies
specification of definitions details rules 2014. Rule 21K. I think you have opened it a great thing.
Yes, I have it with me. So Rule 21K has a definition to executive director. It's actually a circular definition of executive director, just like every other definition that we have referred to up till now. All of them say in one way or other, a director means a director, which has been appointed to the board. But the only difference in some of them you'll find is in the terms of whole-time director, because that says that a whole-time director is a director which is in the whole-time full-time employment of the company. Similarly,
Yes, yes.
so
So
please.
we'll just refer to the definition of executive director once. Means a whole-time director as defined in section 2 clause 94. So executive director is also a person who is a whole-time director. Now, if we see what is, if we try to capture, is a director, the first question that we had in our mind was, is a director an employee? Now, a director, a company is a fiction, but just because the presence of a fiction does not mean that it can undertake the activities without the presence of an individual. So every company, in essence, does require somebody to take actions to decide on its behalf. And that is the board of directors. So if we want to understand the concept of board of directors, we can say that possibly there's one analogy that one can draw is that of soul and body. So if company is the body, board of directors is the soul of it. So a director, in case of an employer-employee relationship, there must be existence of two people, two separate persons. A director, as a member of the board, is the soul of the company. So how can he be deemed to be a separate person? He is not a separate person. As a member of the board, he can never be an employee of the company. There's neither a principal-agent relationship, and he is more in the nature of a fiduciary trustee relationship that he shares with the company. So a director is not an employee of the company, and that is the reason why a company की जो powers होती हैं, they are circumscribed by Companies Act headed with Memorandum of Association. Memorandum of Association, if we refer, it definitely contains objects clause. One of the clauses that it contains is object clause, which contains primary objects and ancillary objects. That is the objects that a company wishes to achieve and the activities that it can undertake. And articles of association. So these are the three documents basically which circumscribe the power, which enshrine the power of the company and provide the limitations there. Now, one important aspect is that the powers of the board of directors, since it is the soul of the company, is coterminous with that of the company. The board's powers are coterminous with that of the company because it cannot be differentiated from a company. And accordingly, then coming to the second question, inevitably a director is a person. So even if while acting as a member of the board, he is not an employee. But the issue is, can he outside as a member, as outside the scope of a member of the company, as a member of the board of the company, can he have a separate relationship with the company? That is the second question that we have. Can a director act in two capacities? Now we'll explore the answer to this question. Now, as we refer to the definition of term managing director, the managing director, if the term managing director is defined in section 2 clause 54, if we just open that definition.
Yeah, we have it.
Yeah. It means a director who is entrusted with substantial powers of management of the affairs of the company.
So, just before we proceed any further, I would just take a moment to summarize so that we are all on the same page, right? So up to now, we know that if there is an employee, then the services rendered by the employee to the employer are beyond GST. But in this particular case, the authorities want to tax the services rendered by the director. Why? Because they are claiming that the director is not an employee of the employer of the company. So to answer this question, we really needed to focus on whether a director can be an employee or not. So we, up till now, we have covered that there can be multiple types of directors who, with some variation, ultimately form a part of the board which runs the company. So while director by itself is not an employee, because they are essentially hand in glove, they're not two independent parties. For legal purposes, yes. For legal entity purposes, yes, they might be. But once as a member of board, they are not. So once they are not independent parties, they cannot have an employee-employee relationship. However, outside their directorship, can there be a situation where they'll have any other role to play with the company over and above their directorship, in addition to their directorship? Right, sir? If I've missed something out, please.
Yes. I mean, this is the exact point.
Yeah.
So, just coming to the provision, the definition of managing director, it means a director who is entrusted with the substantial powers of the management of the affairs of the company. So, managing director is undertaking, first of all, he is acting as a member of the board. Secondly, he is also entrusted and is undertaking substantial powers of management of the affairs of the day-to-day affairs of the company. That is very important. So, in effect, very crudely speaking, in terms under the company law, a managing director undertakes two activities. First, as a director, and the second, as a manager. Now, why I'm saying crudely is a matter of debate, and we can discuss it sometime later as per the convenience of everybody. So, as a director, we understand that as a member of the board, he'll be somebody who's appointed as a member of the board and will be taking part along with the other members. What about the activities of a manager? The term manager is also defined under section 2 clause 53. For reference purposes, we are referring to this because yes, 2 clause 53 means an individual who, subject to the superintendence and control of directions of the board of directors, has management of the whole or substantially the whole of the affairs of the company, and includes a director or any other person occupying the position of a manager by whatever name called, whether under a contract of service or not. Now, this is very important. Contract of service. Now, this concept, what is the concept of contract of service? In case of a contract of service, it's a contract which evinces employer-employee relationship. So, in case of a contract of service, the service recipient enjoys the status of employer, and service provider becomes the employee. The employer, in exercise of its relationship, the powers entrusted upon him by virtue of the relationship, can exercise control over the manner in which services are provided, supervise the provision of those services, and it is in sharp contrast to the contract for service. In case of a contract for service, it's a normal service provider and service recipient relationship. If I give you an example, in our field only, if tomorrow I go to Kartikey, I'm an employee of the company, and I go to Kartikey for providing an opinion on a complex issue. So I won't be able to dictate when should Kartikey make opinion. I won't be able to dictate work timings. I won't be able to dictate the outcome of the opinion. Neither would I be able to dictate how will he work, how will he study and give that opinion.
Are you sure about that?
So that is the beauty of a concept. This is the essence of contract for service. It's a normal service provider and service recipient relationship. And in case of a contract of service, it evinces employer-employee relationship, wherein control and supervision by the employer is the essence.
Right.
And when it says whether under a contract of service or not, it basically means whether or not there is existence of a employer-employee relationship. So we can have a managing director who is not an employee of the company. We can have a whole-time director or a manager who is not an employee of the company. So the answer to the first part was that can a director act in two capacities? First as a director, and second as whether employee or anything. Yes, because since he is an individual, as a member of the board, he can have a capacity. He can act in the capacity of director. But when he is undertaking the functions of management, which are beyond the scope of a director, then he can forge any relationship, whether or not it's a contract of service. So for activities beyond the scope, he can have an employer-employee relationship or a service provider service receipt relationship. Now, there's one very important point that we need to note. If we refer to the definition of whole-time directors under 294, Section 2, Clause 94, Kartikey, 2, Clause 94. So, whole-time director is defined as includes a director within the whole-time employment of the company. Now, what does the term employment mean over here? Does it mean that a whole-time director will necessarily be will share an employer-employee relationship? My answer to this, after reading a lot on this topic from various sources, is no. Over here, the term whole-time employment means whole-time engagement, and there's a very beautiful reason behind it. There's why this interpretation comes into being. So historically, only Companies Act never has been seen to be a legislation which basically delineates or defines the nature of a relationship, the nature of relationship that a director can have with the company. So the Companies Act has never been seen to be a legislation which defines the nature of relationship that a director shares with the company. And there are certain judgments wherein employment has been referred to as engagement. So there is a Supreme Court judgment wherein this very clause was considered, and they said that the term employment is facile enough to cover a service provider and a service recipient relationship, as well as this employer-employee relationship.
Right.
So, and over there they clarified that the term employment is facile enough, which means it can be extended both ways. What is important is that he is in full-time engagement of the company. Now, coming to the next point. So, what are the factors? How do you determine that there is an employer-employee relationship? So, there are 4 or 5 factors which are unique to a employer-employee relationship. First is employer exercise control and supervision over the activities of the employee. Second is employee has the right for payment of wages. Third and fourth, third would be employee's right to reject, and fourth would be employee's right to select the employee. So these are the 4 factors that are there, and they have been basically there's a very famous judgment of the Supreme Court, Pyare Lal Adishwar Lal. It's an income tax judgment only, Pyare Lal Adishwar Lal versus CIT, wherein the Supreme Court laid down these factors. Now, how do you determine the presence of these factors? That's a very important. That's also very important. So, you determine the presence of these factors by way of by referring to MOA, Memorandum of Association, Articles of Association, resolution which has been passed by the board, and whether there is a presence or absence of employment contract. If there is a presence of employment contract, I think it conclusively proves the point
Right.
that he is acting as an employee. The nature of work that he is undertaking, the role and responsibilities that have been assigned to him. So these are the factors. So these are the ways through which we can basically ascertain the presence or absence of these four factors that are there. And Supreme Court has basically emphasized on control and supervision test. The control and supervision test forms the primary test. Then comes all the other tests. Uh, and the so that's the point with respect to the company law. So, Kartikey, you can take forward that you can take forward with respect to the GST laws, the
Thank you.
implications arising from the GST laws.
Thanks a lot. Thank you for explaining the background of the directorship. So essentially, what I understand and what we can take away from this is that while I'll just switch here. So while directorship by itself is not uh, is not in the nature of an employee or employee relationship with a company, but there can be instances or instruments by which this relationship can be created over and above the directorship. So this can be done either by executing a separate contract of service with the director, or it can be done by way of mentioning it expressly in the memorandum of association or the articles of association. So specific mentions can be made. So what will be the effect of this? What is going to transpire in case these instances or these arrangements are made? So what will happen is that for any contract of service, any contractual relationship in the nature of employer-employee relationship, there will be a fee which will be paid to the director for this role, for the employee role, which more often than not is in the nature of a fixed fee. Given that when this will fall under the domain of employer-employee relationship, this fee at least will be outside the ambit of GST. Resultantly, this dispute will be partially resolved, not completely, because there is still a component, for example, like sitting fees, because a director can hold directorship in a number of companies, right? So in such situation, the directors are not always involved in day-to-day functioning. More often than not, they only attend meetings and they go for when there is a decision needs to be taken. So for this, they are paid a sitting fee. So when there is a sitting fee being paid, the sitting fee, of course, will not be for their employment with the company. In such a case, the sitting fee, which may also be so for the sitting fee, of course, is not going to be out of GST. Rather, it will most certainly fall GST, and that is what our understanding is, that the notification 13 of 17 actually wanted to capture this portion rather than the employer-employee relationship or the consideration which is attributable to the employer-employee relationship between the director and the company. Right, sir?
Yeah.
So I'll quickly point out, I think we have not mentioned the two advanced authority rulings. We were about to come to that, but I think we missed it during the discussion. So recently, so as I mentioned, every state has an authority for advance ruling. So these rulings are binding only within the state in which they have been passed. So if I, who's a resident or who's functioning or who's carrying out his business in Delhi, seek a ruling from New Delhi, from the Delhi Authority for Advanced Ruling, then whatever is decided in that ruling will be binding only on me and only within Delhi. I cannot take recourse to that ruling in the state of Rajasthan or Karnataka. So two cases with a similar facts came up, and that is why this became such an issue in the entire industry. Because before this, the notifications did exist, the law did exist, but everyone was either not paying or not paying attention to them. So, but what happened now was that there are two advanced rulings now, and these are the swords which are hanging on the heads of the taxpayers, and they're surely going to hit them and hit them hard. So in this rulings, what happened, I'll refer to one is called Alcon, right? This is from Bangalore AAR, Authority for Advanced Ruling. And the second one is Claycraft, CLAY, Claycraft, which is from Rajasthan, AAR. So facts are pretty much similar. In Claycraft, there were 6 directors who were, in addition to being directors, they were looking after the procurement of raw materials. They were engaged in the manufacturing process of their goods. Then they were also looking after the dispatch and sale and commission and etc. etc. So they were very much involved in the day-to-day functioning, which is unlikely of a director, which is unbecoming of a director. So while they were directors, they were also carrying out functions of employees. So Claycraft wanted some surety on this. So they wanted to know whether GST will be payable on this on the remuneration being paid to these directors. They went to AR. AR not so graciously said that yes, it will be. Why? So for that, I'll open the ruling itself so that we can read the relevant paragraphs. Quite small rulings. So at para 5. Yeah. So these are the findings, analysis, and conclusion of the AAR. So AR held that I'm referring to para 5.2 that we further observe. Okay, we'll start with 5.1. While going through the detailed submission by the applicant, we observe that presently there are 6 directors in the company, and all of them are working at different level of management. Each one of them holding a charge of procurement of raw material, production, quality checks, dispatch, accounting, etc. So admittedly, they were involved in the activities which are unbecoming of a director, which a director in usual course would not involve. So this is where the AR ought to have taken a hint that they also behave like employees and they're not just directors. And there's a crucial point that they missed. Then going further, they said that we further observe that consideration in form of salary and commission paid to the directors by the company is against the services provided by them to the company, and the company recipient of such services and directors are the suppliers. So there is nothing contentious as such with these findings. They're saying that there is a consideration which is flowing from the company in the nature of salary and commission, which is all right, which can happen. And then they say that the applicant is already paying GST by way of reverse charge mechanism on the commission paid to the directors, treating as such amount pertain to the service provided by them in the capacity of director. Now they refer to the question, what is the question? And I'll come to the finding directly. They say 5.8, and this is important. They say that we further observe that the consideration paid to the directors is against the supply of services provided by them to the applicant company and not covered under clause 1 of schedule 3, as the directors are not the employee of the company. In the instant case, director is a supplier of services and the applicant company is a recipient of services. So it is very clear that the services rendered by the director to the company for which consideration is paid to them in any head is liable to pay GST under RCR. So they have completely ignored whether the nature of a relationship between the director and the company. They have not taken due cognizance, and accordingly they have arrived at a conclusion which is not legally correct per se. And this obviously is going to have a huge implication across the industry, because as Lalitendra sir pointed out, that there are around 17 lakh companies, and all of these companies have a lot of directors, and all of these companies pay, I'm very sure, a very handsome amount to their directors. When that is the situation, it is just going to be very difficult. Now, what is the way out? What is the way out? What is the way forward?
Kartikey, I just wanted to refer to one more angle to it.
Yes,
there's an income tax angle also to this entire issue, which is key. Whenever an amount is paid to, so under the Income Tax Act, we have 5 heads, and that is Section 14 of the Income Tax Act, which provides for 5 heads. Kartikey, do you have section? Can you open Section 14 of the Income Tax Act?
Section 14. Yes, just a moment. I'll share this on the screen.
So as per section 14 of the Income Tax Act, we have 5 distinct heads in which income is divided: salaries, income from house property, profits and gains from business or profession, capital gains, income from other sources. Now, the term salary is defined under section 15, the component that it includes. It covers all the components that it includes under section 15 of the Income Tax Act. They are all components that an employer pays as salary, and there any amount that is paid by an employer to the employee for the services rendered by him in the course of the employment are referred to as salaries. Now, salary component is exigible to TDS also. So if you provide me certain services and I pay you money for those, I have the liability to deduct TDS. This is known as tax deduction at source. And whenever you file your income tax return, you will be entitled to avail the credit of that TDS amount that I have deducted at source. Now, salaries. Now, TDS on salaries is deducted under section 192. However, in case of service provider and service recipient relationship, section 192 does not come into operation, and section 194J comes into operation. So, if any person who is over here acting as an advocate when you are providing services to a company, when they are remitting fee to you, they would be deducting TDS on your fee under section 194J of the 194J of the Income Tax Act. Now, what happens is when the remuneration is paid by a company to its director, the company also deducts TDS. Now, on the fixed component portion, the companies end up charging TDS on that fixed remuneration component, which is considered by them also as salary under section 192. On the rest of the component, whenever they pay to the director, they deduct it under section 194J. So one possible argument that an assessee that these assessees have also taken in this ruling is that the fixed remuneration, that the salary that I had been paying to the directors in lieu of the managerial functions that they were performing, was done under section 192, and the CBIC, which is the Central Board of Income, CBDT, Central Board of Direct Taxes, has already accepted my return, and the directors also had declared the fixed remuneration as salary to them in their income tax returns.
Right.
If they have not disputed, why is the GST department disputing it? Surprisingly, this also was not considered by the authority for advanced.
In fact, I must mention this in the case in the Claycraft. They actually, the assessee applicant made a reference to a couple of judgments from Supreme Court as well as the High Court to drive this point home that we have been paying them salaries. So their relation with us is in the nature of an employer and employee. They're not just acting as managers. But it wasn't considered at all. Rather, the AR straight away went to decide that these were merely directors. So these two judgments, one is Ram Prasad versus CIT, which is 1973 SCR 3985, and the other one is Regional Director ESI versus Sarthi Lines Private Limited, which is a Kerala High Court decision 1998.
So I have one question from the attendees, which is what about the commission? What should be the tax treatment that is paid to that on the amount that is paid to directors as profits, as percentage of profits of the company? So, for example, if I say that the director is entitled to sitting fee of 15,000 for each sitting, and he is entitled to 5% of the profits of the company, net profits of the company. and he's also entitled to a fee of let's say 50 lakhs per annum. Then for 50 lakhs we have already discussed. What, in your opinion, should be the treatment with respect to uh, the component which is paid as 5% of the profits of the company? This is my question.
Whosoever wants to answer can raise their hands and we can probably hear them out. So, Gulani sir,
Please.
Okay. So, to my understanding, salary, see, when you talk about fixed component or variable component, these both can be in the nature of salary. And why I say this is primarily because what is salary is not defined by how you term it. Rather, it is defined by the relationship that you have with the person who's paying it. So if I'm obtaining that variable component during the course of my employment as an employee of that particular company, then in that case it will be salary, irrespective of whether it is just variable, whether it is fixed, or I'm getting it as a commission. However, where I'm acting as the agent or I'm acting as a consultant or professional, whatever it is, there can be a number of contractual relationships other than employee and employer relationship. In that case, it will be different. It will be a business or it will be profits and gains from business and professions, etc., etc. But salary, the hallmark will be the employer-employee relationship. So I think variable salary will also be covered by that.
Yes, very right. So you one can refer to the relevant provision, which is section 16.
Okay.
Section 16 of the Income Tax Act.
Let me help you out with that.
Section 17, sorry. Section 17.
Yeah. Yeah. I'll share it on the screen. (17) clause 1, for the purpose of sections 15 and 16 and of this section, salary includes, so there are around eight portions which will.
I think we can directly refer to component number 4, serial number 4.
Yeah.
Any fees, commission, perquisites, or profits in lieu of or in addition to any salary or wages.
Right.
So the term salary refers to actually a payment which is made to the employee by the employer for the services rendered by the employee in the course of employment. So if the term salary over here includes profits in lieu of or in addition to the salary or wages, it basically means what is essential is that we try to determine the presence of employer-employee relationship and not the manner of determination of remuneration. What is the litmus test is the presence of employer-employee relationship and not the manner of determination of remuneration. So if a company has a turnover of rupees 1,000 and he says that to a particular director, I'll pay you rupees 50 or I'll pay you 5% of the net profits. It makes no difference. In both the scenarios, it will be rupees 50 only that he'll be getting. What is relevant is the nature of relationship that an employer-employee shares.
Right. So with this, I think we have come to the end of this session. Thank you so much for bearing with us. And in case you have any comments or questions, please do let us know. We are thank you so much, sir, for doing this, and we hope to do this and continue doing this in the near future. All right. Thank you. Thank you, everyone.